Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Well, good day, everyone. Ira Epstein, and here we are. And this is Friday, the 26th of August, 2011. Here, look at these markets. You've got a stock market that's rallying dramatically. The market's not paying a lot of attention to, I guess, the Hurricane Irene, or it is. Maybe the market is saying the damage is going to come, and that's going to create a stimulus or rebuilding. I don't know. I don't get it. But the market's looking good. You've also got some protection being put on in the bonds and the notes. Why not? You're watching what's going on in Europe. If you think this sovereign debt issue is anywhere near resolved, I think you better do some serious checking. The deal with Greece is fraying at the sides. Can they rescue it at the last minute? We're going to find out. But the collateral being put up has been balked at. And if I were an EU member and Greece wanted to leave, let's let them leave. That could be why you're getting a rally today in the euro currency, as you can see here, so strong against the dollar. You would think, well, it's more sovereign debt issues. Maybe not. Get those guarantees away, the remaining members aren't as in bad a shape. But the market doesn't know, so the market is bidding the gold like there's no tomorrow. In addition, you may have trouble trading on the metal markets Monday. Where do you think a lot of these markets trade? Chicago and New York. Well, last I'm watching, they're evacuating many parts of New York. The financial areas are definitely going to be impacted. And now the question is, can people get back to work come Monday? No way to know. That doesn't mean the exchanges don't have other facilities set up to facilitate trading, but it'll be different. And you've got to take that into consideration. This is a big event happening with this Hurricane Irene. So in looking at the gold market, I think the one thing that becomes evident, at least to me, is that the 1917 to 1704 area, and I'll blow that up, seems to be where the market is currently caught. That is the trading range, and you got a pattern of a higher high, and I can show this beautifully here, and a lower low. The market has widened that out, and it's gone back to its midpoint right here. It can rally actually a bit more and meet a count back into towards 1900 and then try to consolidate again. We'll find out. But unless you take out this 1705.40 and the fact that you're so nicely over the 18-day average, and you 2 days in a row, actually almost 3 days in a row, you've been knocking on the door of that average, we're going to find out what's going to be. Where do you think I would expect the pullback to hold? Here. But I hate the pattern of a higher high and the most recent one, a lower low. That, for me, is a problem. I see big support well under the market, and I think the idea of thinking this market's going to fall anytime soon down into these supports is pretty well gone at this point. I don't expect it the way that I would have just days ago. I think that's out the window. Why do I think that the 1900, not the contract high, might offer some resistance? Because the Bollinger Band top is showing up there. And yes, you can get over that top and you can push it out, but normally when you go and you hit it these first times, it has a way of offering some resistance, so between that and the contract high is it. Am I bullish? Absolutely. Absolutely, because I don't know what's going on in Europe, because I don't know what the president's plan is going to do. I watched Chairman Bernanke talk today, and I guessed right when I was on CNBC earlier in the week, and I said, I don't see him upstaging the president. That would make no sense. But he did something to give us all a warning. Isn't that meeting in September now, the next FOMC, going to be a 2-day meeting instead of a 1? That's at least my take on it. And if that is the take on it, what do you think they're going to talk in the back room? They're going to have a show presentation? I don't think so. I think this is where the real nitty-gritty is going to start settling in. And do we get a QE3? Don't we? What magic tricks can they pull out? I think the market realizes that. It's one of the reasons gold is starting to make its move. That's my guess. My own, I don't know if I'm right. In looking at the momentum index, the market has been coming out of the overbought. It's getting into a nice neutral territory as you're up here in the 1820s. I like that. I like that the market's resetting itself. When I'm looking at the silver, silver is definitively weaker today than the gold market. That's okay. It has to consolidate this. It's got a nice chart pattern. The pattern is as long as you don't take out 38.81, the support is starting to come up, not down. The resistance back at 43. This market still needs the world economies to get a boost of some type. So it's a bit different than the precious metal market, whereas the dollar keeps going down. People are just saying, what do I do? And while the euro is running up, do they really want to own the euro in this type of market? I don't think so. So that becomes an issue. The copper market is, in my opinion, getting now to the point where it's a little rich in price. Notice how the momentum is already getting up now to the 75 area. So what I think has occurred is I think that we've used the month of August to prove that the, let's call it 385 area, is now a value area in the market. Doesn't mean you can't get under it, but I think it's the value area. The market is stalling a bit as it's in the 410, 415 zone, but there's a big vacuum between where you're at here and the last plateau that it built, which is back up in the 440s. So that's the area that if it wants to reach higher, fine. You can see the Bollinger Band is falling dramatically, and the bottom's coming up. So we've taken out this big area and we've narrowed it in. And this had to do with what? Remember the stock market break at the beginning of the month? That was all that volatility. And look at how it followed the stock market. August 9th, roughly, the rally, the 11th. You can come right back. You almost lay it over an S&P chart, and you've got a very similar type momentum here. And if the stock market's up, it's carrying the copper right now. Then we come to the crude. Now, the crude is an interesting market in many senses. This crude market that I've got up here isn't Brent. This is the WTI. So that's not as badly impacted at this point as obviously what's going on the East Coast. Why do I say that? It's still our oil what's going on the East Coast and the refineries, but we're just in Cushing full of oil. So the market's fighting against the 18-day average. The pattern, it needs to get over 86.59 to create the next up leg. That's how I'm reading it. This is your gold-silver ratio at 43, roughly at 44 to 1, 43.8, just drifting sideways. I've been expecting that, and you've been seeing me talk about that for a while. And in the note market, your bid has come back into the market as the market approached that 18-day average of closes, and we've been talking about that here for a while. So there's still very much a bid in this market. There's very much uncertainty. People don't know what to do about what's going on in Europe, so the bid comes back in because you're looking for safety. You still don't know what's going on there. Is one market going to take down the bank? Just because Greece doesn't get its money doesn't mean the problem is going away. Just because some of these countries don't go on the hook, what's in their banking systems? That whole process is going to come back to haunt us. None of this has gone away, and that's not been lost on the gold market. That gold is saying this thing is getting worse, not better. That's my personal interpretation of what's going on. In the gasoline market, well, you've got your higher highs, your higher lows. You've been staying over the 18-day average of closes. You've run straight up from 262.16 to where you're at right now, 278. That's a 16 cent a gallon rise in price. And, of course, part of that has to do with obviously what's going on with Hurricane Irene, shutting down refineries, where you're going to take in oil. Can you imagine all the tankers that are being diverted and everything else that's going on because of that hurricane? It's not a small hurricane. I think it's up to, what, 800 miles in size, and they've got ships going everywhere. So there's going to be disruption, plenty, and you're going to get a bit more for the gasoline probably overall, and that's what that market's been doing. Here's the Brent crude, which is more the world grade crude, and this market has made the higher highs. Now on the pullback, if it can support itself against that 18-day average of closes, it gets interesting. But it is overbought, and I don't think I'd be telling my customers to go chase the market in any way, shape, or form. You're getting a nice rally out of the stock market. I think that the market that's leading today is the NASDAQ. I think it's the powerhouse of actually the stock indices, and I think it got that way when it crossed the 2152 area, and it started a pattern now of making higher highs and higher lows, and I talk about that in my financial report.